Short update on ADA. Yep, it's the crypto sniper. Smash that like button right here, right now. And just a quickie, we've had a recent update on this one, and it's all but home and hosed. The 26/27 is kind of our target range. These things are approximate. They're never to the cent accurate. This particular trade that triggered sometime back just early doors of October, still well ahead of schedule in terms of the time we allow for a trade, and this has come during a period that crypto has been very inconsistent. You've had the FTX events that led quite clearly and obviously to sell-offs across the board. And within that, you've actually had dollar weakening events that led to rally spells as well, such as what you experienced here in the flag and the return move to our just-in-time entry. But despite all the noise and FUD and then the dollar weakness that supported crypto, you've got an inverted structure that just is looking like it's going to largely end up delivering. So we're sitting at 28.6. In actual fact, we call this a fat funnel. There was quite a lot of scope for this to be improvised. You could have traded the break of the lows there, for example, and got in earlier. How you and when you do that, and what level of risk you're undertaking, and how much it changes the dynamic, is something to be borne in mind. We cover that more when you go to the 3 W's, themarketsniper.com, and book a call for wealth building. But unfortunately, it's a sad fact that for most that are hodlers in ADA, it is giving up ground. Could it have a pop of overperformance and go a little further? It's possible. It depends what goes on in the crypto market, but I would still recommend the bulk of the position is closed on the running of our purple line. So as you start to run the 27s and 26 cents levels, you take off. You could have been short, as I mentioned. You could have got in on that shooting star somewhere around here. After this inverted hammer would have been a great opportunity. You could have got in short, for example, around about the 44.1s, 0.2s. You could have had a stop just the other side of the 48s, and you're now looking at something that's probably likely to run into the 26 cents range. So yeah, this one is all but done, all but home and host. We did give you not so long ago an update, that very strong descending triangle, and warn that this flag-like structure that you're seeing here is likely to spill through the downside. So it's actually going to have a small walk home. How much further beyond that, though, we don't have the map for. It might be the bottom, and you might get quite a strong bid for ADA for a while. Don't forget, after you had the FTX news, you got quite a strong rally on the weakness of the dollar, which supported all cryptos and saw this happen. You saw it also in Bitcoin. So ADA is all but done. Nice short video for you just before the weekend. The crypto sniper. You can make great money being on the short side, on the long side, trading tight risk. And I've just given you an example. Let's show you how that might have been. Tight risk and getting an expansive reward. So had you taken that inverted head and shoulder, you could have even put the stop just at the top of that inverted hammer. I'll show you the candle in case you're confused, and then look for the run. I would say you're still probably likely to see the 26 cents. I'd go 26.9s. It's a little bit of a push on there. Maybe let's just leave it at the other side of the target. So that candle over there, for example, it gives you a potential to optimize it and place the stop on the other side. So candlestick charting is still very, very useful. It's a skill we still bring in, and how you can use tactical candles as well in terms of entering just on the candle. And the short entry from there as around about the close, the stop over there, and you actually would have had a plain walkthrough. Although, don't forget, adherence to process is very, very key, because you would have gone from quite a bit of profit, almost 70% of the profit, and given back almost everything to seeing red virtually. And adhering to the full process means that later you collect the full price. Plus, as I've said, 70 to 75% closure, discretional trade on a marginal amount, such as 25% of the position, can lead you to getting a little bit of a bonus, but often can undermine your overall performance if you leave it too long, because you're getting sloppy and you're in the gravy area. So unless there's real new drivers for crypto, which given the amount of news flow, we might have a lull before that comes in. You might not necessarily make more profit, and of course you're spending more time in the market. So counterparty risk aside, and we've had a fair amount of that recently, the carry cost of a trade should also be borne in account. One thing we talk of is the line of efficiency, which is in essence the diagonal line from wherever you might have entered. So I took the close of that triangle to, let's just say it finishes during the course of today, that gradient to the downside that you would achieve as part and parcel of your target. You want steep lines. You want steep lines down when you're shorting. You want steep climbing lines, the minimum amount of time in trade, and the return of capital so it can be expanded on again. Of course, in between there, you'll be giving up a unit of loss every now and then on trades that don't work out, even the best form. So you can see that roughly turns out at about 7.6 risk reward. That means you have purchased the right to be wrong 6.5 times, 6.6 times, and you'll still be one full unit of risk up. So in terms of money management, if you had $10,000 and you were prepared to risk 5%, which would be $500, you would still be at 10,500 if you got the next 6.6 trades incorrect and lost and consumed an entire unit of a loss for getting this one trade right and adhering to process. And the tricky part is the adhering to process, because boy, was there news, was there FUD, was there dollar weakness. There was lots of things both up and both down that lent on this particular trade. And bear that in mind. I went in with a slightly different strategy, more aggressive strategy, that would not and was not prepared to see the pushback to the full run. Sometimes that doesn't always work for you. So I gambled on further bearish news coming out of the FTX events, and actually we got the dollar weakness in between. Okay, thanks for watching. This is HVF method, an example of it on a particular token, and it's probably an epilogue on a particular trade that we introduced some time ago when ADA was actually rather a popular token, and we were talking about Binance's relative strength and ADA's relative weakness to the rest of the crypto market. This could mean that that relative weakness could be coming to an end after this target run, and you can't assume overperformance in the current market conditions necessarily. So even if you closed 100% of the trade, you've done well collecting 7.6 Rs for one trading event. Not bad. You can learn to do this too in bearish markets, and boy are we going to get that both in the traditional markets and in the crypto markets and in bullish markets too. Okay, until next time, hit a like, give us a share. It's currency for us. This is a no advert channel. We're not popular with the algos. Help us overcome the algorithms. Until next time, bye for now.